Hello everyone, hope you're doing well. Welcome to another episode of Altcoin Thursdays. First note on the market, I know we cover Bitcoin elsewhere, but just very briefly, given the correlations and context we covered last week, there's been a very strong move from the lows. We sort of talked about the reclaim of the range low at 1500 for ETH, specifically at 22.5, 22.6 for BTC, and both of those have essentially retraced the entire move down, in some cases made a higher high if you're BTC, and ETH is also above its range, so this all looks very good. The only thing that could spoil altcoin setups for this coming week is basically a negation of those breakouts. So for example, if BTC, for whatever reason, starts to retrace a large part of its range impulse candle, that would look bad for altcoins. Same for ETH. Looks like the market's really trying to break out of this monthly 1670, 1700 resistance. If it starts to fall back below the breakout level, that would also look bad. So if you're looking for some broad-based triggers in terms of these breakouts getting stuffed, those points are rather self-evident. Nonetheless, we'll talk about it more on Casual Friday, tomorrow at the Duck, so make sure you're subscribed to the channel, and we will focus on altcoins given it's Altcoin Thursdays. Now, I've got some familiar names, mostly familiar names, in fact, as far as the alts go, because I think in terms of structure and price performance, they continue to be rather clear. So we'll start with Aptos. Last time we discussed that on the way down, the daily support was this daily cluster at 12.3 to 13.3, and that's where the market bottomed before moving back up. So there's been already quite a sizable move from the level of daily support, and it's kind of between the daily support and the original breakdown level at $17. So I think if you like this market, there's really at this point no reason for it to be retesting the cluster or the lows. I think going back there and retracing all that momentum again would look pretty bad, or at least a broader market would have to look quite rough to facilitate that. So I'm not terribly interested in retrading or rebuying that type of structure. I mean, maybe if you get something clear, or for whatever reason it sort of fails to break down, but really if this is just going to be one of those impulse, consolidate, impulse, retest, bounce, if it's a strong market, that first bounce and single test should be enough to keep it going. So that's not a huge focus of mine going into this week. So as far as levels that we have to work with, I still think this 4-hour level we established initially at $17 is quite a good pivot. It was retested before the breakdown that took us to the daily support. So if there's any type of reclaim business going on there, and 4-hour acceptance above $17 or thereabouts, your short-term target is of course the top of the range at 18.8, 19, but ideally you're looking for expansion into new highs given the retest of daily support. So the pivot that I like for Aptos to reclaim is at $17. That would look cool. In terms of pullback levels, if we see that across the board without going back all the way to the daily time frame, I think we have to get somewhat creative. There is a decent enough little area at about $14.8 to $15. Which is basically this former range low, some resistance, now we've broken above it. So any type of shallow pullback, potential higher low, I think has to hold at around 14.5 at most. Otherwise, it just starts looking a bit murky and going back to the daily level, which I've argued it shouldn't do. So essentially, the two ideas for Aptos, assuming the market doesn't look like total garbage, if you're looking for strength, reclaim the 17.14 hour level. That's really nice, back towards the $18, $19 range high. If we get a bit of a pullback across the board and you like the look of this thing, yes, there's daily support down here, but I just don't like the look of it if it goes all the way. So an acceptable shallow pullback would be towards the kind of midpoint of the range, diddling in the middle, between 14.8 and maybe 14.2-ish. I think that's a reasonable area for a higher low, and then the same considerations apply in terms of where the target for that is and what to expect from then onwards. But this is sort of how I'd look at this market. Another one is Dydx. This appears to have survived the retest on the weekly time frame, which we wrote about during this red candle and technical roundup. So if you're not subscribed there, trletter.com for our free weekly newsletter. So this just looks like a breakout and retest on the weekly, which is quite nice. I still think the interim resistance level, if you're being very conservative, is where the market turned around previously at $3.60. But overall, in terms of weekly structure, this looks good. Now, I think similar to Aptos. I wouldn't be a huge fan of this retracing all the way and retesting the breakout level again. Perhaps if it were very clear and very quick, I should say, like a quick spike or just something that gets snapped up immediately around the $2.50 handle. And that would again be necessitated by a broader pullback across the market. But still, you have quite a clear line in the sand, which is held both on the weekly and the sort of slightly lower time frames at $2.50. As long as it's above there, it looks fine. So the range that it's essentially re-entered is between the retest level at $2.50 and the $3.60 prior range high. I think this is again one of those where the initial high time frame impulse from support is playing out, and by definition you're going to have to diddle in the middle if you're looking for some sort of shallow continuation pullback entry thing, and a similar midpoint level. I think for this thing, maybe we can be a bit more conservative and take this low and try to encapsulate basically some of the SR flippy price action that's been going on. $2.70 to $2.80. You can sort of box it out or zone it out, according to preference. I think that makes sense for a pullback level if the market gives one. Otherwise, you may just be forced to trade the continuation on the daily if it doesn't give you an entry. And again, it's very hard to, make these videos on a weekly basis, because maybe there's some sort of really compelling range that's formed here and gives you a failed breakdown and something to define your risk, and all of that also becomes actionable. Although I would just be slightly patient in waiting for an entry for a couple of these assets, because again, the brunt of the impulse from the obvious level has taken place, and it doesn't hurt to wait for either some newer structure or some sort of pullback to structure in order to get a risk-defined trade. But I think again, the overarchingly important theme is that this looks like it broke out, retested successfully on the weekly, and that looks positive for continuation, again, assuming the broader market allows for it. So yeah, Fantom, basically an identical setup as far as technicals go. There was a big weekly retest level at 40 to 43 cents. The market looks like it survived that weekly retest level. It's pushed up just against this sort of very local range high at 56 cents. And the continuation target for this, if the weekly retest plays out, is the next weekly level, which is the top of this range here at 91, 92 cents. There's a lot of space to capture there if this weekly rotation plays out. As far as the daily goes, I think we may even be forced to go on the intraday. Very similar type of argument, unsurprisingly. A large part of the impulse from the high time frame level has already taken place, so you may have to be a bit more patient or selective when it comes to entries. What makes sense to me for an equivalent type of shallow pullback structure would be some version of this range midpoint at 50 cents, essentially. 51, 50 cents, you can kind of eyeball a bit of a cluster or a pivot going on in the 51, 52 cent area. I think if this local range high is going to provide any resistance, your area for a higher low is there, essentially. Otherwise, there is some resistance here, but it's not the most compelling level in the world. Again, I don't like to lose sight of the big picture. The big picture is this high time frame retest on the weekly holding. So now it's a matter of, again, broader market conditions allowing, catching a piece of that before the weekly impulse kind of runs away with it. And I think for me, the continuation from 56-ish cents looks a bit messy. At least on the daily and on intraday timeframes. Again, that can be corrected if you just get a bit more price action here, which informs your decision making. But if we do get a broader pullback, I think in one form or another, 50 cents has to hold. I wouldn't, similar to Aptos, similar to Dydx, I wouldn't be a fan of the market fully retracing the high time frame impulse and coming back to retest those levels. That may be tradable, but just it would indicate the type of retest that I don't like, i.e., it shouldn't be spending a lot of time at these high time frame retest levels once they've done their job. Ideally, the best breakouts don't retest at all, and they just break, maybe consolidate, and then go up. And if they do retest, you want to break a very quick move to retest on a relative, relative to the time frame, and then a move away. What I don't like to see is what should be a straightforward support resistance flip acting as a magnet, right? So you have like a breakout, market retest, bounce a little bit, then it's back to the levels. Like, why is it spending so much? How important is the breakout if the market keeps getting stuffed back to the retest level? And the answer is not very. Accordingly, given for a lot of these assets, the high time frame retests have already played out, I want to see the market spend less time there if the market is strong and basically move away from them, which is why we're having to sort of cajole an entry and look for sort of intraday compromises, because to a large extent, if the market is particularly strong, I don't want to see it stuck to its retest levels. So again, on the 4 hour, you've got a decent little pivot around 50 cents-ish, which is a fine candidate for a higher low should a pullback materialize. And if not, again, as mentioned, get your range trading lower time frame toolkit out and wait for some clearer horizontal structure to form to inform you of risk-defined opportunities. And again, thankfully, on the Cred channel, I talk about all these things. So I'm not just hand-waving and being vague by saying look for an entry or risk-defined. There's a video on entry triggers. There's a video on top-down approach to trading. Bunch more videos coming. So, I'm not taking that knowledge for granted. I just don't want to shove it all into a single update video. The resources are available. Now, as far as Litecoin goes, still relevant on the weekly time frame. A nice reaction to the $100 resistance, which we tried to use to get Don out of his position. It didn't work, or not yet, at least. If this weekly closes as an engulfing, that is to say, a move below previous week's low, resulting in a close above previous week's high, that would be very strong. And that would be quite a strong signal for continuation. And again, I think we just treat this pre-breakout range or pre-breakdown range on this occasion one level at a time. So weekly reclaim, you'd expect 100 to turn from resistance to support, and then your targets within the range are the midpoint at 115 and the range high at 130. That would be cool. Again, not entirely available at the moment, pending the weekly close if you want to be really conservative. The daily's starting to look decent to support that idea. So it sort of depends on your time frame preference. I wouldn't be surprised if it spent a little bit more time here. But overall, I think if you want to be patient with it, it's the weekly that's going to be the trigger. Something more aggressive would be a sort of spike of the initial retest level before continuation higher. This is one of those tricky ones where on the daily, on the weekly, it already looks good to go. You just don't want to end up being the weekly wick. So it's sort of dealer's choice on that. So you either wait for the higher time frame close, reduce the chances of a great entry, but improve your probability of the trade being correct in doing so, or you sort of front run the high time frame close, increases your chances of getting a good entry or an entry at all, but also reduce the chance that the overall view is correct, or at least to increase the probability that you might get trapped because you didn't wait for all the time frames to align. So depending on where you fall on that risk spectrum, whether you want to front run the high time frame closes, all of those things are for your consideration. I mean, this is a bit wicky at the moment, but either way, I think the levels are fairly straightforward. As far as Optimism goes, this is another one we talked about as far as daily cluster support thing. It did a really good job of finding support at the range midpoint, and it's all the way back to the top of the range. Unsurprisingly, same conclusion. I don't really want to see it retesting or spending a lot of time back at the high time frame retest level if the market is going to be strong. Excuse me, my voice and throat are just gone today. Accordingly, if we're going to get any sort of visible pullback, higher low type of structure, or sort of where is an acceptable level of support without retracing basically the entire impulse from the higher time frame level, I think we can sort of come up with something at around $2.50 or thereabouts, which is basically the little SR flip we had before the final leg down. You had a bounce level on the way, bit of resistance, final push, and then we broke through it. So at $2.50, $2.60-ish, that is just about acceptable. It's at the top of the range now, so slightly less clear. But this area makes sense to me as a little compromise of you still get a pullback, but you don't retrace the entire momentum and start retesting those higher time frame daily structures. Again, a lot of the times the way these things unfold, and Don has spoken about this at length in his own stream, where you get areas where the entries are much clearer, sort of at the higher time frame levels. And then once you get the impulse away from them, it just becomes much more difficult to say, well, where would you enter now? It's like, well, I don't know, because it's no longer at the high time frame levels. You sort of have to compromise. And sometimes that leads to missed trades, and that's completely fine. You can look at something on your watch list and say, well, that's moved away from the high time frame levels now. It's far less clear compared to where it was a week ago. Now I'm just going to have to wait. And there's nothing wrong with that whatsoever. I think the point of this list, I think they're just kind of structurally interesting altcoins that have also been relatively good at keeping up with the rest of the market as far as impulses have gone. Solana weekly could become interesting again. We discussed the potential for a weekly reclaim setup at 24.5 into the 30s and the 40s. That didn't materialize. In fact, it did the classic close above, close below type of level, or pattern rather. So that's resistance. It is salvageable, however. I think if you just get a sort of very clear... I mean, this is very choppy at the level, right? In terms of candle closes and just, didn't look like reclaim type of price action. It just turned into a bit of a grind. I think if you get a very clear impulse through the entire level that just basically wipes out this entire range and closes through it all, I think that would be rather decent. As far as continuation signals go. At the moment, it sort of had a failed breakdown at the swing low and sort of moved up from there, which we also talked about on Monday Markets, I think, or somewhere else. I think basically if this reclaim weekly idea is going to come to fruition, I want to see the opposite of what happened last time. So instead of these ambiguous closes and churn at the level, something that just Giga Chad closes through all of them would be quite good, to be honest. And then I think the range midpoint and the range high would be acceptable options. So basically, if you treat this entire consolidation that took place at the level as a range, I think if the market just blasts through it, that would be a very welcome signal that the weekly is going to come and play ball as far as reclaims go. Or again, if you want to be conservative, just a weekly close through there, and there's still plenty of space until the range midpoint and the range high. Frax is one we spoke about on Technical Roundup, I think round here-ish. Could be wrong completely. This is also one that sort of is coming off the back of a large breakout and hasn't failed its breakout levels. So on the weekly, just going back a step, in terms of where is their candle structure, the breakout level at $7, and then there is the prior range at 14 and 17. If we remove our levels for a moment and just look at this structure in price, it looks like something we've spoken about at length, or at least in the process of forming that, where you have impulse, consolidation, impulse, right? This looks like the 3-4 week range we have at the moment could well be another consolidation before an impulse. Again, broader market conditions allowing for it. And so there are some positive signs within the range. Again, the market came in and spiked the previous 2-3 weeks of lows, and it looks like it's going to close above them. Again, quite early, but for the time being, that breakout or attempt at a break got bid up, which is nice. And then on the daily time frame, you can sort of see that very clearly, where you have this range low, market spikes below it all, and very aggressive buyback, which is nice. So if you're going to get the impulse consolidation, impulse type of price structure, I think you need to see the upper boundary of this sort of range high, which is a bit messy, admittedly, but that's kind of what you expect with altcoins a lot of the time. So something through $11.5, because I don't consider this to be a good level of resistance. So if you start getting daily closes above the upper boundary at 11.5 or thereabouts, that would sort of solidify the case for this entire consolidation sort of breaking to the upside and moving towards those weekly levels. Again, a bit choppy, bit messy, but overall, if you zoom out enough, it does look like impulse consolidation. And then if you're going to move in tandem with the first impulse, that would make sense to move towards those weekly targets. I would also mention, if the market does get a bit wicky, spiky, scary, whatever, this still looks fine as long as this daily cluster doesn't fail. And that's a bit lower down, bear in mind, but that's between $8.5 and $9. If you get a deeper spike within this range, if this run wasn't enough and the market is pushing lower, I still think the overall weekly breakout idea is viable as long as you don't get a daily close below that cluster. Because if it does, that starts to look pretty terrible. But as far as having a nice little pocket below the current range, this makes a lot of sense to me. Might be a tricky... I mean, the market looks strong, right? But still might be a tricky week overall, given where we are relative to weekly levels. If we get very clear continuation, I mean, the market's probably going to, the books are going to be empty, and it looks like, it'll be the type of scenario where you could just basically slam a lot of these and print continuation, because yeah, that's just going to be the state of it. Bitcoin filling back to 30K-ish, ETH breakout, etc. So you won't need to think too much. I think we're close to that. I know Don said, fuck all resistances, there is no resistance. I completely understand the argument. But just bear in mind to at least have a tail case in the back of your mind that we are at the extreme as far as the weekly range high goes on BTC, and similar for ETH, kind of poking at or above the high. So just make sure you're not in a position where even if it pulls back moderately into the previous range or the breakout level, that you lose all your money. As long as that's not the case, that's great. And I think if we do get very clear continuation from these weekly levels, there's going to be a ton of space to punt alts between the weekly breakout and the next level resistance, So I'm fine being slightly more patient on that front, but if you want to start being aggressive and front-running the breakout before it happens, not something I'm particularly good at, but at least, hopefully, those are some names you could pay attention to. That's all from me. Let me know if you want Altcoin Thursdays to continue. Leave us a comment and we'll review it, because again, it's a new show, so we're not married to it. It just depends on what you guys like. If you like it, we'll keep it going. If it's a bit stale and boring and whatever, we'll nuke it. That's all. Thank you for watching. Like the video. Thank you for your support, engagement-wise, on the channel. I'm going to shut up. Have an awesome weekend, and please tune in tomorrow for Casual Friday. We missed it last week because Don was ill, and we won't do it again. Well, I have no control over that, do I? What if he falls ill or I fall ill? But we'll try not to. Tomorrow's happening anyway. I'm going to shut up. Goodbye.